Now, global markets are still reacting to Donald Trump's victory in the United States election. Investors are concerned about higher tariffs, a possible trade war with China, and of course, less support for carbonization or decarbonization, factors that could impact the mining sector. For more on how commodities and metals might respond, I'm joined by Alex Tuckett, Head of Economics at the CRU Group. Alex, thanks very much indeed for talking to us.
Thanks. Great to be here today. Thank you.
I want to start with what's happening on the market at the moment. Very interesting to see, Alex. I mean, that rebound in gold and silver, gold moving, I think this morning above $2,700. Silver has halved its slump from the reaction to the Trump victory. What's your take on what's going on?
Yes, I think a few points to make here. I think, first of all, Trump's second election, Trump 2.0, was not a shock in the way that his first election was in 2016. So across markets, and this counts, for industrial metals as well, equities, interest rate markets, there's a lot of it was already priced in, right? So I think there's that to take account of. I think the other point to make is a lot of the devil's going to be in the detail. So we know Trump is going to be president, but we don't really know for sure what he's going to prioritize, what he's going to do. There's often quite a big gap between what he says and what he actually does. So I think over the coming months, you're going to see quite a bit of volatility in exchange rate markets, but also in commodities as markets try and work out just what he's actually going to do. And as he picks his top team, that'll move prices as we go along. And I think the third point I'd make is there's quite a few moving parts here. So there's what Trump's going to do when he's president, once he's president. And it's not even completely clear whether he'll have a House majority yet. It looks quite likely, but that still isn't confirmed. So that's another variable. But then there's also what other countries are going to do and how they'll respond in terms of retaliatory tariffs. But also, if you look at China, China has delayed the announcement of its fiscal stimulus until after the election, quite deliberately. And our view is now they know that Trump is going to be in there, and there's the prospect of significant tariff hikes in the near term, next year or 2026. They'll probably introduce more stimulus than they would have otherwise. They'll go beyond just a mop up of local government debt into providing more real money that'll spur demand in the economy. And for some commodities, for iron ore, they're much more sensitive to what goes on in China than what's going on in the US. So there's a lot of moving parts at the moment.
Having said that, the Trump campaign's economic policy proposals, for a long time, were heavily weighted towards tax cuts and tariff increases, as you pointed out. How is the mining fraternity in general watching this space, especially in the months that come, Alex?
Yeah, so I think the single biggest issue for industrial metals is going to be that tariff, that potential of a wider trade war. So I think the metals community will be watching very closely to see how big those tariff increases are, who he targets. Clearly, he's indicated he'll target China the most. He's talked about even targeting Mexico and Canada, who are part of a free trade agreement with the US, which will be renegotiated. I think it's more likely what we'll see, actually, he'll put pressure on Mexico and Canada to in turn put their own restrictions on Chinese goods, and to avoid sort of a backdoor, if you like. So that's the biggest issue, because I think, as we've seen with the first trade war in 2017 between US and China, tariffs create a lot of uncertainty. They're not good for the industrial sector globally. They tend to result in a pullback in investment. And none of that is ultimately very good for metals demand. So I think that's the single biggest issue. I think a secondary, not trivial, but secondary issue is what happens to green spending within the US and the subsidies that Biden introduced to push decarbonisation under the IRA. That's particularly an issue, I'd say, for battery metals, where EVs probably look the most vulnerable area of that.
Decarbonisation efforts, as you say, are probably going to get a softer approach from the Trump administration. And, there were hints all over, if not pretty straightforward talk on what they think of that space. Now, the metals operating in that space, and you see Canada also supplying some of this. The EVs, as you point out, it's a big issue. I'm wondering what happens in terms of how they posture themselves, because once you start holding back on those decarbonization efforts, the value chain does get affected quite tremendously, doesn't it?
That's right. That's right. So it's certainly not a positive development for battery metals. But what we have seen really in the last year or two, we've seen a bit of a stumble in the EV transition in the US anyway. Yeah, we saw big increases in market share 2020, 21. That's really leveled off, and part of it is a lot of teething problems. The charging infrastructure isn't necessarily there, or people don't feel it's there yet. The subsidies that were introduced by Biden were very restrictive in how they tried to remove Chinese companies from the supply chain. That's really, really difficult for batteries because China has such an important position in the global value chain. So the US wasn't really driving battery metal demand globally even before Trump. It was China was a big driver, to a lesser extent Europe, and so this isn't at the margin positive news, but it's not necessarily a deal breaker. There'll still be a lot of demand for EVs over the coming years from other regions, even if we see less from the US, I think.
Alex, in the next few hours, we have that Federal Reserve decision in the United States. They set to cut interest rates. I'm wondering how that influences the landscape. I mean, it comes at such a time, very interesting time on just a day post-election in the US. Just, especially given the fact that one wonders whether or not the pace of those interest rate cuts now might change and be a bit softer. How does this interest rate environment change the landscape?
Yeah, I think that's a really important part of the picture. I think, as you said, the view of the market, I think broadly correctly, has been a Trump presidency will mean it won't mean rising interest rates, but it'll mean a slower path of the Fed cutting cycle. I think this Fed will still be cutting rates because I think rates are still above their equilibrium level, their natural level. If you look back at the last cycle pre-COVID, rates got to sort of 2.5, 2.75 at the top of the cycle. They won't necessarily go back exactly there, but there's still quite a gap. So I think rates will still fall, but they are likely to do so more slowly, given the Trump package as a whole is likely to be inflationary. I think what's very uncertain right now, and why the Fed will not be drawn on the impact of Trump right now. They'll be very clear and say, look, we're just looking at the economy as policy, as fiscal policy, tariff policy develops, we'll react to that. Is because the timing is uncertain. It's very unclear when tariffs are going to be introduced, how long it will take, what routes may be used to do that sort of legislatively, and so on.
All right, we'll have to leave it there. Well, Alex Tuckett, Head of Economics at CRU Group, thanks very much indeed for your time.